Other thing that we need to take note is that what are the trends that will come in future. Because like MRT is still a crazy thing. Yeah, so with the RTS going to officially roll out shortly, I personally might avoid properties in the north because we don't know what is the full impact of that.
That's very daring.
Very contrarian view.
Hi guys, this is Mick here, and today we have Selina and Sebastian. Sebastian has about 27 years of real estate experience, and Selina, like me, has about 5 to 6 years already in real estate. Today the topic we'll be talking about is actually the property market leading into 2026 and actually the years to come. A lot of agents, a lot of people will be saying, there's never a bad time to buy property, which actually might make sense for some people depending on their needs and wants. But let us dive in today deeper on actually which part of the cycle we are in today, right? Actually in 2026, actually the end of 25, we have actually found out that the HDB statistics have shown that the price has actually started to plateau. And if you have been following up with the news lately, can see a lot of BTOs being announced at very prime locations. I think recently Shunfu. And even though the new launch market for the new condos are doing very well, we think that particularly is because they are in very good locations, like River Valley area with Zion Grand and River Green. But those locations that are not so great, like Nara Residences and the Sand, are actually not performing as well. Today we will have a bit of banter with Sebastian, who has so many years of experience seeing the market coming up and down, maybe to share a bit of what he thinks the market might be moving forward from 26 onwards.
So maybe to add on to what Mick said about property price, HDB prices plateauing. The other thing that you should take note is that the volume has dropped drastically. So it's a bit like the stock market. When you're at the peak and the volume drops, that actually the prices are actually near the peak. If you are selling off your older HDB, you might be exiting at a good time and a good price, because thinking of the next buyer has to wait another 5 years, it gets even older. But are we going to be in the upward cycle again? That's a question that you have to ask yourself.
I think that's one thing. Second thing also, the new prime locations will have 10-year MOP. So it means that the cycling of these properties selling after 5 or 6 years, these people will be caught out for much longer. Right? If you are, let's say if you get a prime location BTO, you get the flat, it's 3 to 4 years before collect the keys. There's another 10 years again before you get to exit. I guess when you are time locked for so long, you really have to be a bit more cautious even when you decide for your BTO, right?
Well, I would think that we have not seen a cycle of a 10, 13 year cycle of MOP, 3 years construction and 10 years MOP. We have not seen the cycle and how the market will perform then. This is something maybe for the younger agents you really have to take note of if your career in properties is on the long term. So these are market cycles.
I see. What do you think, Selina? It's because you say younger agents. I think that's maybe referring to you and me.
I think in this current day and age, I must say I have some friends who actually have gone ahead for a 10-year MOP in Bayshore, BTO. So they are around my age, which is 30-somethings, right? So by the time they actually get to exit it is maybe when they are closer to 50 years old. Is that a worthwhile gamble, I would say? It's a little bit challenging for some people to be able to accept that they might skip 3 to 4 cycles of property buying and selling. But for some of them who really like the sea view, who really think that East Coast Park is the bomb for them in their lifestyle and their life stage, then I think it would make sense. But for majority of people, if you are looking at housing or real estate as an investment, more so than just a place to stay in, then this perspective might change.
Well, my thoughts is that for the next 10 years, it's an accumulation of wealth, because if you are young, your salary is going to go up. Your accumulation of wealth, that means your CPF accumulates, correct? And you're not draining your monthly installments because your installments are high. There is a positive side to it. we wouldn't say that's negative. It's a matter of how happy you are and whether the environment that you have chosen a special area that you're happy with. Because I think in the end, happiness is more important, especially if you have a family.
Yes, for sure. I would say that it depends on your needs and your wants. If let's say you're looking to buy and stay for the comfort and the pleasure of owning a place that is iconic and has that Singapore skyline and sea view, I think Bayshore, the BTOs that are long, that are in central prime areas might make sense. But if let's say you are looking at a home in terms of looking for upside gains and exiting in a few years' time, then perhaps the BTO option is not that great or fantastic for a person or a family like them, right? What are your thoughts, Mick?
At the end of the day, I think the general market is that the market will slow down because of the many BTOs that will come out. The pricings have actually plateaued a bit, and you can see from the recent data that it's going to slow a lot because the volume has dropped a lot. Usually for property prices, we follow the volume to push up the transacted price because everyone wants $10 PSF higher and whatnot. What it means for the next few years of 2026, 27, 28, because HDB is the base of the property market for the upgraders, right? So when that slows down, the upgrading also will slow down. And we can already sense or see that the new launch market or the private market, there is a strong resistance of the affordability that they can buy into. Most of the buyers in the market are generally transacting about 1.5 to 2 million, and anything above that is the properties that are selling are all moving much slower than before. So in this market today, what would actually be the best move? Let's say whether you're holding a HDB or any private property, what would make sense, right? Does it make sense to go bigger just because you think that it's a bigger property, you can make more money? Because supposedly, like let's say it's 1,500 square feet, every $100 you make 150K versus 1,000 square feet. But the thing is, we have sold properties that's 4-5 million or so. Once you hit a certain price point, it is very difficult to push the PSF because of affordability, and these buyers are not so keen to put in so much money. It's not that they cannot afford it. They are not so keen to put in so much money stuck in the property when they might have other resource or other places to put in as well, right?
Well, I think that for the younger people who are in the HDB upgraders, to me, I think the solution is going to the resale market. Slightly older properties, a little bit bigger. Of course, the location must suit you for your needs, your purpose, why you want to live there. Like you said, if you buy 1,002 and it goes up $100 a square foot, it's 120,000. So, but it compensates by having a very good lifestyle because it's bigger, especially for a growing family. So there's no right or wrong. In the end, is what suits you most, and what do you crave for? Do you go for a bigger space? It's like when you first started working, you can afford the smallest car, but when you want to upgrade, you upgrade to a bigger car, but you don't upgrade to a smaller car, right? So it depends on your needs and your use, and your desire.
That's why I mean, let's say, because as property agents and also investors ourselves, I think it's very important to understand what part of the cycle we are in, right? So like if we are in this phase of price affordability consolidation, actually what we have been doing or what we should try to do is to reconsolidate our portfolio into properties that have more defensive attributes. I would think. Okay, so
well, maybe from my own experience, I've seen cycles in the 1997 cycles, the 2006 cycles, the 2013 cycles, and then this recent cycle from 2019 till now. I think this has been the longest upward cycle, I feel. So, everything is in cycles. So, I think the more important thing is what you see is whether it suits your needs and your desires. Desire is one thing because you must also be able to afford it. So, to me, is the cycles, like in every good market, there will be buyers and sellers. In a bad market, there are also buyers and sellers.
So probably what would make sense now if we are in the consolidating market is to switch into properties that have more defensive attributes, right?
Yes.
So what are the kind of attributes do you think are very helpful to switch into lah? I mean, one of them possibly is from leasehold to freehold, right?
Yes.
Because now the price gap is so thin, even though a lot of
Yes.
people will say that 99 is appreciate faster than
Yeah. So
freehold.
when you do that, actually you are hedging against time, which I think makes sense, correct? Because if you hold the next 10 years, you're 99 years or so, 10 years older, but your freehold doesn't matter. The property gets older, but in the end, value is in the land, not in the building. So yeah, it makes sense.
So the lease tenure, freehold will be more defensive attributes.
Yes.
I think maybe something else is the size of the unit, because if you can live in it, you can actually hold it for longer,
Yes.
right? If imagine like if you have a growing family and you own a 2-bedder or 1-bedder or even a compact 3-bedder, you find it a bit tougher nowadays with the
Especially for a growing family.
yeah.
So that's also part of being defensive.
Correct.
Yeah.
So I think one of the topics that most people talk about, especially when they touch into new launch, they always talk about the PSF versus per square foot versus the quantum, right? So we agree that because of the latest affordability, the latest layouts, so-called being more efficient, the quantum is better managed because it seems like the same price for newer
Yes,
property.
more
But
presumed.
what do you actually think of the PSF?
Well, I think the PSF is, in the end, when you're served by an agent or you do your own CMA, you roughly know what you're getting into, especially if the gap between the freehold and the 99-year. If the gap is too narrow, it's automatic that you go into a freehold. But if the gap is wide, which I think that it always happens in any market, so it's a matter of you have to look at your own risk appetite. I think.
So,
Yeah.
so I think personally, quantum is important because that will be how you exit, right? The next seller to exit. But PSF is still ultimately a reflection of the value of the land, right? The property that you.
Well, in all
you
my
buy.
years of experience serving buyers, what do we look at actually? In the end, is PSF, correct? To look for value. Then it's the quantum, then it's your affordability. So it's the same like how you exit. You buy, say, 2003, you want to exit 2005. But if the same area is still selling at 2003, how are you going to exit at 2005? So in the end, the value is actually still based on the PSF. Yeah. But of course, affordability is the other side of the equation, which you have to answer yourself. Yeah.
I mean, if I were to add in, I think that PSF itself is one key indicator, but it's not the entire picture. If that's what our conversation has been revolving around, I think sometimes even though the unit might be very big and large in size, the layout may not be very efficient, or you may have a lot of wastage of corridor space, or may have large void areas. Like certain people, they may like penthouses or duplex. But in actual reality, does duplex really make sense for families, that may have young children and all that? So you might be thinking, oh, PSF is very cheap. But the thing is that, like, does the layout make sense for your family? That's also one major consideration I think that buyers in the market need to consider about. Not just the PSF itself, but also the quantum, also
Yes.
whether the layouts make sense.
I think what Selena says is that it reflects into a cluster housing. The PSF seems very low, but then you got to look at the layout and how usable is the space and whether there's a lift inside, if it's a 3-story, 4-story. So these are things that I think that you have to really consider. And we being agents, we've seen a lot more properties. We can understand the dynamics behind it, especially for the buyers. Yeah.
So if we were to sum it up, moving on from 2026, if you own a highly priced HDB, you might be better off selling it first to enter into an entry price condo because it's a better store of value, right? And then you can come back to buy a HDB at any given point in time because there's 1.2 million HDB, correct?
So if the other way is, a very good example is that you sell a MOP 1
Flats.
million new HDB 4-room flat. If you want to stay in the same estate, then you just go to a slightly older HDB for the next 5 years and accumulate your CPF and wealth again. Yeah, but then you make sure you protect your principal that you have cashed out.
Correct. So likewise, even if someone would like to, let's say they own a private property already, what would make sense for them is to sell something. Maybe let's say they can sell at 2 to 2.5. They can sell it and rebuy something at a similar price range without topping up, but into something that we like. We talk about the more defensive attributes lah. Whether is it freehold, lower PSF, there's a bigger size. Because if you sell and then you go into a same space, then the same size, then there's no point.
Yes,
so you
that's
like
right.
need a bit of size, or unless you switch from a 99 to a freehold.
Yes.
Because I mean the way I see it is for consolidating markets, there is not much upside that we can foresee. So when you enter into a so-called lower PSF, a bigger unit, your risk is reduced lah, compared to a smaller unit and entering at a higher PSF price point.
Yes, that's true. But one caveat I would like to say is that don't sell and leave. Hope for prices to drop, then buy back. Because there's no such thing as surety. Yeah, it's a matter of hedging your own positions. Yeah, and it's the same like in the stock market. Why is there such a thing as hedging? Nobody sells naked. Yeah.
So I think in this current market where we are already consolidating and it's plateauing, right? I think many people are still trying to look for value buys, right? So what do you all think are some of the potential areas that we can be looking at in terms of value buys for clients?
Personally, I feel that Singapore has done a very good job in decentralization, right? So to me, we still have to monitor the gaps between the prime areas and the non-prime, because the non-prime areas have. I'll just use this term prime and non-prime. We don't use the OCR, CCR, RCR, because it might be a bit outdated already in today's market. But the prime areas, let's say your 9, 10, 11, and 15, if the pricing that you can enter is similar, then you might be better off entering these prime estates, because they have the people who can actually afford and hold
Holding
the
power.
properties in these same locations. Of course, we can also tap on areas where there is catalyst for growth, which is a combination of both lah. And I think one other thing that we need to take note is that what are the trends that will come in future. Because like MRT is still a crazy thing. Yeah, so with the RTS going to officially roll out shortly, I personally might avoid properties in the north, because we don't know what is the full impact of that.
That's very daring. But to answer Selena's question, I think we are in a flux at the moment, because we've never had property markets running for close to 8 years. I think it's the longest run in the property market cycle if I can remember. So I won't answer it immediately, because I think I would like to see figures coming out. Like today, DBS Bank says that the profits are down 10%. So these are things that I think affects a lot of things. To me, I think value buy is we have to do a lot more homework, I feel.
I think maybe to end off, defensive attributes will be key in moving on to the next few years.
Yes.
Right, because consolidating market.
Yeah, defensive for now.
Yeah.
I think that's the right.
Correct, because I mean upside we can still ride it as long as you remain in the market. And if you're looking for something, you don't actually have to rush, because in today's market, you don't have to. It's not like during COVID, the Black Swan event. People were worried, and then they really want a unit, and then
I'm
they
sure
just go
all
for
of us, we know that our advertisements are slow now.
Yeah.
So we know.
Yes.
Yeah, so we
But
just
we
have
to work, but we have to do work.
Yeah, so we need to have a strategic plan in place. Look out for the value buys. You don't rush, but you don't wait out too long, as you said, right? Once the market move up too much, they are totally out of it already. Correct. All right. Thanks for your insights today, Sebastian and Selena.
And me?
Thanks for watching, guys. We'll catch up with you again. Bye.
Bye.